why it's so important to have a realtor watch your back during that presentation.
Yeah. Okay.
We're going.
Hello. Okay. All right. Jessica Hines with eXp Realty here. I'm here with Angela from Stearns Home Loans. How are you doing today, Angela?
I'm good. It's Friday. How are you doing?
Oh, I'm good. We're a little earlier today, but that's all right.
It works. We're ready to go.
My husband's been keeping me up watching the Imposters.
Oh.
And before I know it, it's like midnight. And I usually go to bed at like 9 or 10.
Well, you're up and early. You're ready to go today.
Yes. All right. So today we are talking about credit and collections. And you're going to give us some tips and tricks too, right, Angela?
Yes. So here's the great thing about credit that you love and hate about it. You have to have credit to get credit. To get good credit, you got to keep using your credit, but not too much credit or you'll screw your credit. That's really it in a nutshell. But what does that mean? What does that look like when it comes to credit? You start off automatically with a 0 credit score. So let's say you're 18 years old, you have no credit. How do you get it established? One of the best ways to do it, if you're on your own, you have no family members to help, go get a secure credit card from a credit union. Best place to start with a credit card. Credit unions are great for kind of educating you, giving you some information on how to use your credit. Because a lot of people, what happens is they get their credit card and they're like, well, now I'm approved for this credit card at this store. So then they have an Old Navy, they have Victoria's Secret, they have JCPenney's, they got Macy's, they've got Cabela, they've got all these credit cards. And that's actually really bad for your credit. You don't want 15 to 20 different credit cards on your account. You just want a couple credit cards that you manage very wisely and that you keep the balances low. What gets people into trouble is when they have a credit card that say it's a $5,000 balance, but they keep their or a $5,000 limit, but you keep your balance at $4,900. Your score is going to tank. It is going to get lower because you're utilizing your credit incorrectly. Yeah. You're maxing out, and so creditors are going to consider you a greater risk, because that's really what a credit score is. It's analyzing your risk factor to lend you money. So if
what do you see is a good percentage to have it up?
So it's kind of an open for debate. Honestly, the safest is to stay under 10% on the utilization of your credit cards. Super easy. My rule of thumb is if you can't pay it off at the end of every month, don't put it on your card. There are times, obviously, you have to use it as an emergency. Something comes up. Maybe you're using it because there's going to be a greater return on investment later by using that credit card to, say, fix up a house and resell it. It really is, if you're going to be making that kind of judgment, it means you've already have a lower risk assessment, rather than what I typically see people charging up their credit cards to the max and then making only the minimum payment.
Right.
And that's how you pay a lot of interest on your credit cards and how your scores can tank.
Right.
I love this. I think it's fantastic. Credit is nothing more than an algorithm of what your risk factor is. And so learning how to manage it. Also, you need different types of credit. You can't just have a credit card and reach that amazing score of 850. And then the other flip side is if you have a whole bunch of credit cards, you've had them for 20 years, but then you go and close, say, 5 of them, your score is actually going to tank because you just took away that reporting of good credit for all those years. And now it doesn't show that you have that credit utilization open.
Right.
So that's another mistake. I've heard lenders tell people to close accounts and their scores tank. It's because you just took away that one thing that was reporting on you.
Yeah.
So the credit card is a good one. I recommend everybody always check your credit. You can go and get, and I think I just sent you the link, so hopefully we can put it up later, is you can get your free credit report once a year. Every 12 months, you can get a free credit report from Experian, TransUnion, and Equifax. Those are the 3 major bureaus that report to the credit, that make up your credit score. And typically when we're talking about credit score, we reference their FICO score. So there's different things called the Beacon score, the FICO. There's what Credit Karma uses, which is their own scoring system, which is different than the FICO system. Credit Karma goes to 950. If the FICO score goes up to 850 is a max. And I will say it is very, 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 very rare to have anyone in the 850 range. It's not something you typically see, but the ones who I do see with the high credit scores have had a home, have had car payments, and had a credit card for a long time to get those scores up, and with perfect payment history.
Right.
So that's where you want to make sure, you can get a car loan, but then once you pay the car loan off, now that's no longer reporting. So your score will drop once you pay it off, which seems counterproductive because it shows that you're responsible and you pay your loans off. But when it comes to your score, they want to see how you utilize it consistently. So when you do pay a car off, well, that's no longer reporting. So you're not going to have something giving positive feedback on your credit.
Yeah.
Collections are one of the biggest ones that I see that will drag it down. And judgments obviously also happen. So making sure you stay on top of those, and you'd be surprised how you can have a collection, never knew you had one.
I've had that happen before.
Yeah, you had it happen. I had it happen. It's horrible. And you have to negotiate to pay that off.
Yeah.
So when you do have a collection on your account, you want to call the agency and you want to get in writing what they are accepting for the payoff. So say you owe $1,000 on a collection. You want to know in writing that they will accept a payment of $1,000, or sometimes you can negotiate it down to $800. You want that in writing before you send them the money. And then when you do send them the money, you want to make sure that you keep documentation of how you pay them. Typically, a cashier's check is a great way to do it. Something that will give you a record, your check from your bank to pay it off so that you have a record, because a lot of those keep a picture copy of your credit. And then always getting something from them showing a zero balance when you pay it off. That's the key. A lot of people don't make sure that they get that letter that shows a zero balance, because there's humans running it. They can make errors. And if they make an error, it's less incentive for them to follow up and make sure your credit is fixed as it is for you to have it fixed. So getting a copy of that collection showing paid and having that, and you can actually submit that directly to Equifax, TransUnion, and Experian to have it removed, because obviously the credit companies, they have timeframes that they're supposed to do that and actually send it to remove it. But it still takes time. And if you're in a hurry and you want to get it done sooner, you have to take ownership and get it done as quickly as you can. Because you have everything to gain. That will help bring your scores up. But not just paying off collections is going to bring your scores up. You need to make sure that you also have some revolving debt that is reporting positively on your account. So it's staying in the 10% range is the safest bet, because it should be a percentage that you can pay off every month. If you do it right, you can use the cashback features on a lot of credit cards, which are fantastic. I put our groceries on there because I know I have to get groceries and to pay them off every month. So I get them on there, pay them off, and I get thousands of dollars at the end of the year that have accumulated in cash back. So
it's like shopping at Costco.
It is. It could be like a fun game. I mean, you can make some money off of it. So, but you can change your scores. I mean, I can do things to my credit and change it. I can make it 600 or I can make it 780 within a 2-day span, depending on what I have for my credit utilization on my own credit. And I do this just to experiment and see what happens. Because I like to see that, it does work. I'm not just blowing smoke. I've done it on my own. I'm that firsthand experience kind of person. So I want to see it and do it. And it works like a charm. Also, car shopping. This is the biggest one I see also hitting people's credit. When you go
inquiries.
Oh, good Lord. Go car shopping. And one time I had 16 inquiries in one day from car shopping on one of my clients' account. And I was stunned, and she didn't know they were running her credit. Which that's a whole nother ethical thing. But just being very mindful when you go to shop for a car, tell them, nope, I don't need you to run it. If you do have good credit and for a fact you're going to get approved for the loan and you don't need to barter with them, you can control how they pull your credit. If you're going to use a credit union, which I recommend if your scores are a little bit lower for a car loan, love my credit unions for that. They typically will have a better program, and you're not going to have 15 inquiries on your credit.
Yeah,
So
exactly.
setting that
Not
up.
going through the dealership and going through your credit union is definitely the way to go if you
Yes,
have access to that, for sure. I agree.
absolutely.
Yeah. So I've been told that when you're first getting credit, to get 2 credit cards, which is what I have done in the past, which has worked great, but you're saying it's okay. 1 is good.
You can do 1, 2 is great.
Okay.
And I think it's also one of those things that when you're married, you have a credit card, and then you usually typically get a joint credit card, or you have 2 separate cards. I have 2 separate cards that I just have my husband as authorized user on, and then he has another credit card, 2 other credit cards that I'm an authorized user on, so that we're separate. Doing that as well, we build in our own children's credit. We have 4 kids, and so for each one of them, they are authorized user on a credit card, where I can watch them use the credit and teach them how to use it properly, so that when they are 18 and they get their first credit card, they have some credit already established, because they've borrowed my good credit to help establish a good credit card, credit for them. So whatever credit card we get for them at 18 will be a credit card they keep for life.
Yeah.
Because if you can have that credit card, good payment history for life, that's how you get those 800 scores exceedingly quick. So along my plan, our children, by the time they hit, 18, 19, more than likely 19, they'll have 800 scores, because they would have borrowed already our good history for the last whatever years we've had those cards. And it goes on to theirs, and then they get their new card at 18. That'll be the card they keep for life.
Yeah.
So it's a way to give your kids a leg up. I did not start out with great credit. I had horrific credit when I first started, because I didn't know how it worked.
Yeah.
It wasn't really discussed in school. We learned how to balance a checkbook, but we didn't learn the intricacy of how credit works.
Yeah. I remember when my daughter first learned about credit cards, when she was little. She didn't know, but she just, you're paying with a credit card. I think for her first experience was with her aunt, and she's like, and then it's like money when you don't have money. I'm like, what? No.
Yeah.
Let's do that, but
But that's not how we want to do it. That's not how we want to do it. But it is. It's kind of baffling if you think about it. It's digital. It's not something we physically see, just like your paycheck. You don't see how much is taken out of your paycheck, but you know what you take home. So when I ask clients, well, what do you make gross before taxes? And they're like, I know what I bring home, but I don't know what I gross. So it's, if you don't see it, it's very easy to forget how it can affect you immensely.
Yeah.
So, and not saying that there aren't emergencies that happen. I've had emergencies that have happened, but there are, if you can avoid as much as possible and plan and make sure that you're just not spending what you don't have in your savings account, it helps.
Well, and that's why it's a great idea to just use, 10% of your credit available, so that if an emergency does come up, you have that there too. So
yes, you would have the money already in your account or not. And now granted, when you're talking about, I grew up doing minimum wage. That's what I made. I was minimum wage. I lived off minimum wage. That's how, so I understand how hard it is to save money and put money aside. But one of the things is to just be mindful and maybe keep a log of what you actually spend, or look at your bank statement afterwards and see, how many times did I eat out? How many times could I have maybe made the meal instead? And so when I was first trying to save money on minimum wage, which way back then was, I think it was like $2.35 an hour. I think it was. God, that's how much.
I don't even remember. That sounds really low, but maybe it was. I worked like 3 jobs, so.
Oh, I've had so many. Yeah, no, back when I used to work, it was fast food. That's what I did. I worked fast food, went to high school, and I worked in fast food while I was going to high school. And so I was not making very much, but it helped. And so learning how to save money, and it's an experience to learn that.
I do recommend that you go through, because I've done it before. I've gone through and I'm just going to run my eating out calculations and just see how much you spend over a month. And then you're like, oh my God, because you really, you don't realize it's $4. Oh, it's, whatever it is. And then you're like, I went that many times and I spent that much money. If you ate at home and put that money in savings or that money to pay down your credit. Yeah, it's eye-opening, and it's good. I mean, you can live in denial, but when you really
Numbers
see
don't
where it's
lie.
at, it's
Yeah.
like, whoa. Yeah.
Yeah. I mean, and it's expensive to eat out, and it's kind of, you know, for us, it's very much a treat. We're in a very different financial situation, but we still don't eat out often.
Yeah, we don't either.
Because family of 6, when you go out, it's $100 without even blinking.
Uh-huh.
And then a couple of the kids are like, I'm still hungry. I'm like, well, go eat something in the pantry. We're fine. Yeah.
Yeah.
But yeah, just being mindful and looking at just credit utilization. And then as you get going, when you start, you know, you start small, maybe it's a $500 limit. Then you start and you kind of play with it. You get used to it. You get the habit, because it's a healthy habit.
Yeah.
It's just like as if you get up every morning and you have to take a walk, or you get up every morning and have your coffee. Thank God for coffee. But you get up every morning and you do that ritual. Same thing with credit, just learning how to use it very minimally. And then as you get better at handling it, you just push your limits up higher and higher and higher. Every time you can push your credit limits up, it then shows, well, now instead of a $500 balance or limit, now my limit is 10,000, but I'm still only using, you know, $50 a month.
Yeah.
You know, it starts, you still have that. So now your credit score will go up because it shows that you have this much credit available,
Right.
but you're only using this much. So as it, you know, your limit gets up here and you're still using this much, that's how we start driving that score up. But if you're, you know, you're here and you're starting to use this much of the limit, and then you know, your limit's higher and higher, well, that's where this play here of how much available credit you have is what starts driving your scores up. Because you're less of a risk factor. You have no 30-day lates, no 60-day lates, no rolling lates. That's why when you have forbearance, watch how that works, because there's already been some talk of people who have been in forbearance that there's some things that they have to do to try to fix some of the credit that has popped up from it because they didn't understand the fine print. So getting all of that kind of under your belt and watching it, constantly checking, hey, do I have a collection? Because not all collection agencies are fantastic at getting in contact to you. And then there's that myth of it falls off my credit report after 7 years or after 10 years. There's that myth everyone says, well, it's a collection, it'll be off my report in 10 years. Yes and no. So a lot of the collection agencies are really smart and they just sell their collection to another collection agency. Now the time starts all over again. So it's not going to fall after 10 years. You need to address it. You need to get rid of it. Even if you end up doing a bankruptcy, things can still come up that you didn't know about, that you didn't include in your bankruptcy, that they can come after you now. So, you know, mindful of that. One of the things that I also see that will mess up people's credit, unfortunately, is divorce. Divorce seems to be the biggest one that will mess up, where you did everything right. You have a vengeful ex that decides, well, you know I'm on the mortgage and I'm supposed to refinance you off, but I don't have to. They can do late after late after late after late, and it's going to drag your score down, and there's nothing you can do about it. So divorce lawyers, make sure you talk to your divorce lawyer that your credit, what can you do to protect your credit, making sure they have to get it refinanced after a certain time period so that you're not stuck with that debt. And again, if you have credit together, joint credit, now you have to cancel those cards that were reporting correctly to get it out of both of your names. So I still recommend, not that I advocate divorce, I just advocate your credit. I've been married 22 years. We still have separate credit cards, and we just have authorization for each other so that we're all protected. That sounds really morbid, but it's just a way to never have to restart your credit and keep that credit going. So that's the other thing to think about. Keep your credit a little bit separate, but you can be authorized users, which means he uses my card anytime he wants. I use his card whenever he wants. Sometimes we forget which card we're using, but it's watching that debt together.
Because then you can always remove the authorized user.
Exactly. You can remove.
And you have your own.
And on that fact of authorized user, I've done this with my mother before, and I've done this for some clients at works. My mom is old school. She doesn't do credit. Bought her first house when she was in her late 60s, had zero credit score, got her in her house. She sold it, paid everything off, and she went back to a zero score. So we worked really hard. I had her up into a nice high 700 scores. She paid everything off, closed it, and went back to a zero score. So she wanted to get a car. So this is how it's experience, right? It was actually, it's a good experience.
Yeah.
So she wanted to get a car, but she had no credit. So what they were offering was horrific. So what we did, I went home, I put her on one of my credit cards. I had that as an authorized user, not a joint user, just authorized. I had a credit card mailed to me. She never saw the credit card. I love her, but she never saw the credit card. It came to me, and within 2 days, I pulled her credit, and she went up 150 points. It was 158 points. So she actually ended up getting from a zero score, because she had one collection that we paid off, so we were able to get her to like a 648.
Nice.
So it happens very quickly, and you can do it. And she's adamant about not having credit cards, so this is how we overcome it. I just throw her on mine, so she borrows my credit and gets decent credit. So,
well, it's just like starting credit for your kids. You know.
Same thing. They get to borrow my good credit history, and it works to their advantage. And this is one of the things that they don't teach you. This is how some people perpetuate you get ahead in life. As we talk about what's going on in society, this is your way to help your next generation be better than you were and to have a leg up. And I think that's what we all want as parents. How do we get our kids to have a leg up in the world? And it's a great way to do it. Teaching them how to manage credit. It's a tricky thing. And I've done super numerous things that will screw it up. And you get things that even if you had perfect credit, you can get hit with, the market in 2008 that happened. A lot of us got stuck in it. And there's times where you do everything right. I had an 840 FICO, got stuck in that 2008 crash. There's not much you can do. You just swim the best you can. So,
well, and right now, a lot of people are in that situation. If they had credit cards and now they have no income, obviously they're going to be using their credit cards.
You have to
survive.
To survive, and it makes sense. It's understandable. We're talking about ideal situations when we're not in the middle of a weird pandemic.
Exactly.
All hands and all bets are off when it comes down to this.
So, you just you do what you can to get through and survive.
Yes, you can. But those are just some quick tips. And again, if you want to message me, call me, text me, we can talk about different options specific to yours. One lady was fantastic, super adorable. She just didn't have a credit card. She needed a credit card, and that should boost her score up. She just didn't have anything positively reporting on her. And that's going to help her quickly get that score. So I'm excited. I love watching people's credits turn around.
And secured is a way to start too. If you don't have credit, you can't get an unsecured. I know you mentioned it, to get a secured credit card. And a secured is, if you're getting a $500 credit card, you're putting that $500 ahead. So
it's a weird concept. It's secured because it's your own money, and you're really borrowing against your own money, but it's a way to get started. So you can even get them for as I think 300 at most credit unions will even do it. But like I said, credit unions are fantastic in so many ways. That's a great place to start. But again, you can go to the annual free credit report. I believe I sent you the link.
Perfect.
Get your credit to see what's going on with it, to look at it. And when you look at it, you can see, oh, you know what? She's right. My credit card limit is $500, but my balance is $490. Well, now I know why my score is 618. Now, if I pay that credit card down to a $5 balance, my score is going to go up because I'm stimulating good scores. So that's your first place to look at it. See if you actually have any collections. When you do call them to pay, make sure you get it in writing. Big proponent in writing when you're paying off. Because I have seen some.
I've had to do that before. I'd had to get my payoff in writing because I found out many months after, and I saw it on my credit report. I'm like, this was paid off months ago.
Mhm.
And I didn't have that verification. So I had to get that so I could prove that it was in fact paid off. Yeah.
Yeah. Yep. Yep. And it's documentation. I just always cover your tushy. That's what paperwork
Yeah.
is. So
Yeah.
that's one of the things. But that's it. It's pretty simplistic. And you can sometimes negotiate a payoff down on the collection companies, depending
Yeah.
on who you get.
Significant. I've had pretty significant luck on getting it because they just want it. They don't want it either. It's bad credit for them, but they want it done and they want some money from you.
Yeah, they do. They want some money and you can negotiate. And honestly, if you call and you get one person, they might be having a bad day, call another day. Maybe you get
Yeah.
a different collection person on the other line that has sympathy and will work with you. It's
Yeah.
really all about who you get on the other line and, not coming at them angry because they're just doing their job.
Right.
And that helps a lot. And it's understandable because it's frustrating. It makes you angry when you have something that you didn't know about that you're like, I didn't know. I would have fixed it. I would have never let it get
Yeah.
to this, but no one told me. And it's easy to want to yell and scream at them, but they're just doing their job. They're just answering the phone. So the more kindness you can come out with them, the kinder they will be, and they'll help you find loopholes. Go, you know what? We could actually do this.
Yeah. Well, and just like I have found when I have been in a bad credit situation, the collection person that calls when they're kinder and understanding and empathetic, I am, in a much better mood because I understand it's hard to answer the phone when you're getting those calls, but answer the phone, make your calls, talk to the people. But when somebody is nice versus, all right, you need to pay this. You have these two bills and they're the same amount. Which one are you going to pay first? Honestly, I'm going to pay the nice one because they work with me, and that is my good karma, and that feels better to me to work with, a company. And I understand the person on the other side maybe not being nice. It's probably in the atmosphere. That's the environment of the collection agency, not the human, I would hope.
Well, yeah, but it's true. I mean, it's a human aspect. We're all just trying to fight through the day and make through without going into prison orange. I mean, let's just admit it. There's days we're just trying to survive. So
yeah.
Just
I have an analogy here. So
okay,
checking your credit report annually is like going to the doctor for your physical.
Yes.
Checking your monthly for how much you spend eating out or the other little incidentals that you spend, that's like every diet plan. When you look at what you're eating and what you're intaking in your body, makes all the difference and helps you to make good choices. It's the same thing with checking what you're spending.
Exactly. I'm so proud of you. That is a perfect analogy. You have to keep checking in on it. It doesn't just magically stay perfect. Just like your body doesn't stay up to date. It just doesn't. As we get older, oh dear God, it doesn't.
It's harder, isn't it?
Yeah, that's perfect. That's a great analogy. I like that.
Thanks. All right, everyone, thanks for watching. We will post this on our other forums and YouTube and such, and then I make sure and have our contact information in the comments. Again, reach out to Angela if you have any lending problems, and reach out to me, Jessica Hines, if you have any questions regarding real estate, looking to buy, sell, want a home valuation. If you just want to call Angela for some help with, what do I do to get my credit where it needs to be so I can get good rates to buy a house? I mean, she is definitely very, very knowledgeable and can help you out.
Thank you.
All right. Have a good day.
Bye.
Happy Friday.
Happy Friday.